Okay. So sometimes that can be a bit of a nightmare for the learners and for some businesses. So hopefully this afternoon we'll be trying to sort all those small problematic areas out, and hopefully we should be answering the questions for that when it gets to the examinations. Okay, so it'd be easy because that is generally a small topic and they can easily just ask 15 to 20 marks regarding that, and eventually some ethics regarding that, which is also very important for any business and person. Okay, so let's just have a look at a few concepts that we're talking about. So one of the first concepts that we normally have is the VAT. That is an abbreviation, and that normally is value added tax. So that's a little bit of basic knowledge. It's in everyday life. People speak about VAT, and it stands for value added tax. That's something that we learned in grade 10, we carried over to grade 11, and then eventually in grade 12 as well. Okay. Then another topic, normally we have something called SARS. Again, it's an acronym which stands for South African Revenue Services. That is the entity that normally collects the VAT or pays out the VAT refund to businesses. And as the matrics know, they also are the entity that's involved with the income tax. So normally we have to calculate the income tax at 28, 29 or 30% of the net profit. Those monies all have to be paid over to SARS, which is the South African Revenue Services. Okay. Then another thing that we normally talk about regarding VAT is the standard VAT rate. Now normally the standard VAT rate is the percentage that we're talking about, and that percentage at the moment is 15%. Okay. In the past it was 14%, and then the Minister of Finance made an announcement in his budget speech that from the 1st of April 2018 the VAT will move from 14% to 15%, and then all our calculations will be based on 15% and not 14%. But what's very important, if you are doing any past paper earlier than 2018, then the 14% is still applicable and not the 15%, because only from April onwards the percentage changed, and now then you'll have to use the 15%. But the good thing is just to check to see if the figures are working for 14% or the 15%. Right, then what we normally encounter, something which is called zero-rated items. Right? In other words, on these items, the percentage of VAT that we are charging is 0%. So in other words, there is no VAT on these items. Okay? And these are normally, examples of these items are normally fruit, vegetables, and any basic food stuff that we need to survive. Okay? So we can have brown bread, will be VAT-free, but not white bread. Okay? Because there's more processors for the white bread, therefore they need to charge VAT on the white bread. But the basic foodstuffs, like the pulses, the beans, the legumes, those are all examples of zero-rated items. Right, then something else that we're also dealing with, it's called an exempted item. Okay? The difference between the exempted item normally and the zero-rated, the zero-rated you can touch, you can see that is something that you have to, it's exempted, right? But an example of exempted items are school fees and transport services, the export services. We are not allowed to charge VAT on these items. Okay, that is just a few concepts. So let's just move on. Then we get what we called something which is called VAT input. Okay, so what is VAT input? VAT input, as you can see on the screen, that's the VAT that is paid by a business to another VAT vendor when they are buying goods and services. So what's very important is we need to distinguish between the difference between VAT input and VAT output. The VAT input is the VAT that you are paying when you're buying goods and services, right? And you're paying that VAT over to another VAT vendor. Okay, we'll get to the terminology of the VAT vendor later. But for now, you need to understand that VAT input is the VAT that you are paying when you're buying goods and services. And that is normally included in the cost price. Okay. Then we also have something which is called VAT output or output VAT. That is the VAT that we collect or receive when we are selling goods and services. Okay, so the input, that's the VAT that we pay when we're buying goods and services, and the output is the VAT that we receive when we are selling goods and services. And as you can see from the definitions on the screen, that the VAT input is based on the cost price, and the VAT output is included in the selling price. Okay, both of them are charged at 15%. Just one included in the cost price, which is the input, and the other one will be the output that will be on the selling price. Okay, so those are just a few of the terminologies that you'll have to find in each and every question regarding VAT. So I need to make sure I understand what are they talking about, and then we can define some of those concepts, and then we can look at them again. Okay. Then just one more thing, we spoke about what is a VAT vendor. So a VAT vendor is a business that has registered with SARS as a person paying VAT. So now that business should pay VAT. That business will have a VAT number, and because he's paying VAT, he is allowed to charge VAT because he is a registered business. So every time when he buys goods, he has to pay the VAT, but now when he sells these goods, he's allowed to charge VAT. So you're only allowed to charge VAT if you are registered as a VAT vendor. Now there's two things for registering for a VAT vendor. You get a number from SARS, your VAT number. Then your annual turnover or your annual sales should be more than $1 million. Then you are complied, you must register. Right? You are forced, which means it's compulsory for you to register, and they call that compulsory registration. You have to register if your annual turnover is more than $1 million. Okay? So what happens if your annual turnover is not more than $1 million and you still want to charge VAT? Then you can volunteer to register as a VAT vendor. But your annual turnover has to be more than 50,000 and less than $1 million. Then you can volunteer to register. So again, if it's more than $1 million, you have to register. You are forced to register. That is compulsory registration. Right? And if it's 50,000 and less than $1 million, then you can volunteer to register. But in the end, you can only charge VAT when you're selling your goods if you are registered as a VAT vendor. So if you're making more than 50,000 and you want to charge VAT, then it's best to go and register with SARS as a VAT vendor, and then later you can offset the VAT, your output and your input, so that you can maybe receive some money back from SARS in the form of a refund. Okay, so best, if it's more than 50,000, register as a VAT vendor, then you are allowed to charge VAT. Okay, more than $1 million, you have to register. It's forced to register. That's compulsory registration. Okay, you need to comply to the VAT regulations, which is very important for any business. Okay, so now with those concepts behind us, you can just look at a activity. Okay, so as you can see, what they're giving us a word bank where they've got the word evasion, they've got zero rated, they've got input VAT, they've got avoidance, which is something different to evasion. Then they've got the million, they've got output VAT, they've got the VAT exempted, they've got 15%, 16%, and the 15,000. So what they have, they're giving us 6 different options, and we just have to a definition, and then we have to supply the term or the amount to each definition that they are talking about. So if you're looking at 1.1, for example, it says the VAT that we paid when vendors are purchasing trading stock. So that means when we are buying, and of those terms, we'll have to look at it. When we are buying, there's input VAT and there's output VAT. Now remember, when you are paying, you are buying the trading stock, that means you will be paying, so that answer should then be the input VAT that you are paying. Okay, so there we can see already, input VAT is the VAT that you are paying when you're buying goods and services. Okay, the goods obviously refers to the trading stock. Okay, then if we're looking at 1.2, it says that receiving rent for a private residence is an example of, in other words, we need to find, is it evasion? Is it zero rated? Is it input? Is it avoidance? A million? What is it? So rent received, you are not allowed to charge the tenant VAT on the amount of the rent. Okay? So the rent is an example of an exempted item. In other words, whatever the rent is per month, 8,000 rand per month, you can't go and add 15% to that. The rent remains 8,000 rand a month. So rent received is an example of an exempted item. Okay. At then by 1.3, we've got tax. Something refers to the legal measures to reduce the tax payment. In other words, this is the legal loopholes that's in the system that we are allowed to pay less tax or less VAT in this case. Okay. So there are two words over there. The one says evasion. That's the first one on the first line. And then the last one on the first line says avoidance. Okay. So if it's legal, then it refers to tax avoidance. If it's illegal, if you are not paying any VAT and you're supposed to pay VAT, then you are evading SARS, and then it will be called tax evasion, and that is illegal. Whereas tax avoidance is the legal measures that can be applied to reduce the payment of VAT. Okay? So the difference is the one is legal and the other one is not legal. So evasion, that's the one that's illegal. Okay? That's, you're trying to defraud SARS for the amount payable to SARS. That is illegal. Whereas avoidance, that is the legal measures that can be applied to reduce the tax payments. Okay, so we're just looking at those three again. So we've got the input. That's when we're buying goods and services. It's an example of an exempted item. That will be the rent that we are receiving, not allowed to charge VAT on your rent. And then also we spoke about the tax avoidance, and also what's the difference between the tax avoidance and tax evasion. Okay, if we're going further with the definitions, it says by 1.4, the VAT received by an electrician. So if we are receiving VAT, hopefully the electrician is registered as a VAT vendor, then he is allowed to charge VAT. So the VAT received by an electrician for services rendered, the VAT that the electrician is receiving, because he is selling his goods and services, he will be receiving output VAT. So that VAT, the electrician has to record as output VAT for services rendered, and we have to charge the VAT on that. Okay. Then by 1.5, we've got the definition of what is the standard rate for goods and services. The standard rate, which is the current percentage of VAT in South Africa, and it moved from 14% to 15% on the 1st of April 2018, and that answer should then be 15%. Okay, and then the last one, it says 1.6, the businesses with an annual turnover of more than have to register for VAT. In other words, we are not talking here, we're talking about the two different registration methods. The one is voluntary registration and the other one is compulsory registration. So the voluntary, that's when the business earns between 50,000 and a million. Whereas the compulsory registration is when the business earns, the turnover is more than a million. So as per definition by 1.6, it says businesses with an annual turnover of more than 1 million, they will have to register with SARS for VAT as a VAT vendor. And then also it allows them to charge VAT because they are registered as a VAT vendor. Okay, so that activity was just as an icebreaker. They might appear in your question papers as we're going along, but as you'll see, it will just be concepts that we have to understand and we have to know when the answers come. So when they come in the exams, grade 11s and grade 12s, it will be easy marks when we understand exactly what we're looking at. Okay. Then, just to recap, just to make sure that you know the difference between zero-rated, avoidance, evasion, exempted items, and zero rated items. The 16% in the word bank, it's actually no significance about it, so don't look for anything that's regarding with these 16%. But the other items are all still regarding VAT. Okay, so the 16% we might never know. It might increase to 16% eventually. Okay, but as it stands, it increased from 14% to 15% on the 1st of April 2018. So that was just, like I said, concepts, calculations, sometimes that you have to understand when we're dealing with the VAT. Okay, so let's have a look at what activity 2 is all about over here. Okay, then we're going to come across concepts again, which is called VAT inclusive. Okay, so the word inclusive refers to when the VAT amount is included in an amount. Right? So in other words, we need to find out if that figure is VAT inclusive, and we want to know how do we get the VAT amount. Then it says when the VAT is included in an amount, we're going to call it inclusive. The calculation for VAT, in other words, we want to take the VAT out. It will be the amount that's given times 15 over 115. Okay? Times 15 over 115. Okay? Why? Because the figure is inclusive, so it's 100 plus 15 at the bottom, 15 being the VAT percentage. Okay? So it will be 115 at the bottom, and we want 15, so it will be 15 over 115. So that will be, when the terminology talks about inclusive, we have to use the 15 divided by 115 to get the VAT amount. Okay? Then the next one that we're talking about will be VAT exclusive. Okay, so again here it says when the VAT is excluded, in other words, the VAT, the amount does not include VAT yet. So there the calculation will just be a normal calculation where we say take the exclusive amount and you multiply it with 15 over 100 to get the VAT. Okay, so once again, the input amount will be 15 over 115, whereas the output amount will just, the inclusive will be 15 over 115. And the exclusive will just be the amount times with 15% to get the VAT. Okay? Those are all just terminologies and calculations. So when we're looking at the 15 over 115, that will be for the inclusive. If it's multiplied the VAT amount to get the VAT amount, and then also if it's exclusive, all you have to do, you just have to multiply with the 15 over 100, the 15% being the standard VAT rate at the moment. Okay. So let's just move along and see what activity 2 has got to talk about. So activity 2, they're giving us extracts of each journal. So we need to find out, first of all, we identify the journal, we identify if it's the selling price or the cost price, and then we can identify if it's output VAT or input VAT. Remembering that output VAT is based on the selling price and input VAT is based on the cost price. Okay. So as we have there, it says by 2.1, we have to calculate the output VAT from the cash receipts journal. Okay. So let's just look at that. It says also that the cash receipts journal, it is VAT exclusive. So if you can just go back one page quickly. Exclusive means that we have to take the amount and multiply by 15 over 100 to get the VAT. Okay, so here we go. As you can see, we've got sales to an amount of 268,000. And then we've got debtors control of 100,000, and then we're looking for the VAT column in your cash receipts journal. So as it stands at the moment, the only item that we are allowed to charge VAT on is the items that we sold. And in this case, our sales amounts to 268,000. So if we're looking at it to calculate the VAT, and because it's exclusive, we have to take the amount of the sales, which is 268,000, and multiply that by 15 over 100 to get the VAT amount that we have to have by the question mark over there. So simple, straightforward. It just says the sales figure of 268,000, and I multiply that by 15 over 100. Why? Because it says VAT exclusive, and then you'll get the 40,200. So that is an amount of output VAT, and we have to pay that over to SARS. So you need to remember that any business is only a collecting agent for SARS. The VAT that they receive is not theirs. Eventually they have to pay it over to SARS. Okay, so it can't increase their sales. That's why the sales figure, as you see it in the cash receipts there, is without VAT. Okay, you have to separate your sales figure and you have to separate your VAT figure, because the VAT belongs to SARS. The business is just a collecting agent for SARS. The VAT does not belong to them. They cannot use the VAT for any other purpose but to pay it over to SARS. Okay, so now we know that we owe SARS 40,200 that we have to pay over for VAT that we have collected on behalf of SARS. That's what we're doing there. Right, so that figure will be 40,200. So we, strictly speaking, we owe SARS 40,200. Okay, then as we go further with activity 2.1, it says we have to calculate the input VAT. Okay, so in other words, again it says exclusive, but in my cash payments, what did we buy? And we paid VAT on the items that we bought. So clearly we bought trading stock to the value of 230,000, and we also bought equipment and services. Okay, so those two items together, and because it says exclusive, it will be 250 plus 120,000 gives me 350,000, and then I have to multiply. So it's going to be 230,000. So that's the amount of trading stock that we bought. Plus, we bought equipment and any other sundry services, and that came to 120,000, which gives me 350. And because it's exclusive, we multiply with 15 over 100, and we get 52,500. So that 52,500 we're going to classify as the input, because that is the amount that we paid when we're buying goods and services. So strictly speaking, SARS owes you that 52,500 because we paid them, and only once we start selling, then we'll be receiving that, and then we have to pay over the VAT. And then we're going to get the difference between the two. We can eventually, right at the end, we will offset the input from the output, and then we'll pay them the difference to SARS, or SARS will pay us the difference, depending if we've paid more than what we should have or whether we've collected more than what we should have. In other words, if my output is more, I will have to pay the difference. And if my input is more, then SARS will give us a refund for the difference. Okay. So as we stand, it's 40,200 and 52,500, one for output and the other one for input. Okay, then they've got the debtors journal. So normally the debtors journal, it's also when we are selling our goods to our debtors. Okay, and because we are selling, it's based on the selling price. So we have to talk about an output, because output is based on the selling. Okay, and we can see there, it says that figure is including that, which means it's 100% plus 15%. So that 345,000 is actually 115%, and we want 15. So we have to say 345,000, which is a figure including, times 15 over 115. Okay, so why 15 over 115? Because it says it's including the VAT. And then we'll get an answer of 45,000. So that is the VAT, again, that we have collected on behalf of SARS because we are selling our goods to the debtors. And the VAT that we're receiving from the debtors, that will be the VAT that we have to pay over to SARS at the end. Either at the end of the month or at the end of every second month, we have to pay the VAT over to SARS. Okay, so we've got 45,000, that's the VAT that we have to owe SARS. Okay, so that takes care of the activity 2.1. That's the first part of the indication over there. Okay, then For 2.2, it says indicate the posting of the VAT amounts from the other journals. So the other journals, as it stands there, is the debtors allowance journal. That means the debtors are sending the goods back. The creditors journal, that is when we are buying goods on credit from the creditor. And the creditors allowance journal is when we are sending the goods back that we bought. So it's very important for us to distinguish between, is it based on the selling price or is it based on the cost price? Because once we have the selling price and the cost price identified, we can determine whether it's an input or an output VAT. Okay? So as it says the debtors allowance journal. We just had earlier, we had an example of the debtors journal. So that means we are selling the goods to the debtors. Now the debtors are sending the goods back, which means the amount that we have to pay over to SARS will become less. So our output, our liability, the amount that we owe SARS, that will become less. Therefore, that will have to be debited. Because output, we're going to owe SARS less. So we're not collecting the VAT on the goods that the debtor is sending back. Our output will become less. And obviously, the debtor himself will owe us less money. So account debited will be output VAT, and account credited will be debtors control. And because the VAT amount is given, there's actually no calculation, which is just 7,245. Okay, again, the debtors allowance, the debtor is sending the goods back, so I won't be collecting any VAT output. So my output will become less, my liability, which is the output, and liabilities decrease on the debit. That's why output VAT goes in the account debit column. The debtor himself will owe me less money because he's sending the goods back. That's why the debtor's control will go in the credit column. My asset will become less and it goes in the credit column, and the amount is 7,245. If you're looking at the second item, they're talking about the creditors journal. We are buying goods in the creditors journal. We're buying on credit. So that refers to input VAT. So when we are buying, you're actually paying the VAT, and SARS will owe you. So when SARS owes you, you see the input VAT as an asset, which is a current asset, and therefore the input VAT will be debited because we are buying. And because we're buying it from the creditor, creditor's control will be credited, and again, the VAT amount is given. It will be 18,000. Okay. When we're buying, creditor's control will be credited because we will owe the creditor more money, and our input VAT we're going to pay over to the creditor. That is our asset that will increase, and that is why we have it in the debit column. Then in the last case, we've got the creditor's allowance journal. So we've got the extract of the creditor's allowance journal, and it's inclusive. So again, we have to make a calculation. But if we're looking at it, if we can see that the creditor's journal, it says the input VAT is debited. Why? Because we're buying the goods. We're going to owe the creditor more. Now we're sending the goods back to the creditor, which means now we're going to owe the creditor less. So therefore, creditor's control will be debited because we will owe them less money. And if we're sending the goods back, we won't be claiming the input VAT on the amount of the goods that we're sending back. Okay? So again, we will owe the creditor less, and the input VAT, we won't be able to claim the VAT because we don't have the goods. The goods has gone back to the creditor, and the VAT on that will actually decrease my claim from SARS. My input will become less, so now SARS will owe me less in this case now. Right? And there's a calculation that says it's 28,750. It's inclusive. So if it's inclusive, it's 15 over 115. The amount is 3,750. Okay. So we just have to look. Debtors allowance journal. The debtor owes me less, therefore it goes in the credit column, debtors control. I'm not collecting the output, so the output VAT will go in the debit column. Okay, so it's debit the output VAT, credit your debtors control. The second one, the CJ, the creditors journal, we are buying goods and services. So we're paying the VAT, the input VAT, which is an asset, therefore we debit the asset. Creditors control, the figure is 18,000 because it was given in the journal over there. And then the creditors allowance journal will then obviously be the inverse or the opposite of the creditors journal. So that's why the creditors allowance journal is creditors control debit and your input VAT is credit. And obviously there's a calculation. So it will be 15 over 115 times the amount, and that gives us 3,750. Okay. That takes care of activity 2.2. So if you're looking at 2.3, we have to distinguish. It says calculate the amount payable or receivable from SARS for July 2019. So what I have in front of us there is one column for the output and one column for the input. The output amount is the amount of VAT that we're collecting when we are selling goods and services. So we have to pay that money over to SARS. Remember, the business is only a collecting agent for SARS. The money does not belong to us. And the input VAT is the VAT that we've paid already. So all we have to do, we just at the end, we have to offset the two figures to see, okay, this is how much I've paid and this is how much I'm supposed to pay. The difference will then just eventually be payable or receivable. So as it stands, it says we have to calculate the figures payable or receivable. So the figure that we need first of all, that will be the figure from the cash receipts journal. And we calculated that right at the beginning. We said that the CRJ, that was 40,200. That was the amount of the sales that we had. It was without VAT, it was exclusive, and then we just had to multiply 268,000 times 15%, and that gave us the 40,200. So that VAT we're supposed to pay over. So strictly speaking, as you can see there, we owe. And remember, output VAT is based on the selling price. So we owe SARS 40,200. Then what we also had, we sold goods on credit to our debtors, and that figure came to 45,000. So if you're looking at the 40,200 and we're looking at the 45,000, those are both sales. We sold to the debtors or the customers. One was cash, that was the cash receipts journal amount. The other one was on credit, and that was the debtors journal amount. Okay? So it's a cash sale in the CRJ, and it was a credit sale in the DJ or the debtors journal. So we, strictly speaking, we owe SARS the sum of those two figures together. Right. Then also what we had a figure from the debtors allowance journal. Remember, the debtor was sending the goods back. We just calculated that figure earlier. It was 7,245. Because it's no longer a sale, we cannot pay that VAT over to SARS. So we can classify that as an example of, let's say, a negative output. We won't be paying the 7,245 over to SARS because the debtor sent the goods back to us. So we're not collecting that VAT. That's why we're making the amount that we're owing to SARS less. Remember, it's based on the selling price, so I'm assuming that it goes in the output column, and it will still be a negative, but we won't be we don't owe SARS that money anymore. So now we're going to make that a negative output, and then we can. So now we owe them that amount, 7,245 less. Okay. Then also we had a figure right at the bottom. It says number 2 from the general journal. It says that we had a figure of bad debts. It says 4,500, and the figure was exclusive, so it was just 4,500 times 15%, and that gave us the amount of 675 Rand. So why do we have the 675 Rand in brackets? Remember, we just sold to the debtor. The debtor has disappeared. We won't be collecting the VAT on the amount that the debtor owes us. Therefore, we don't owe SARS that money because it's gone bad. So the VAT on the bad debts, based on the selling price, is, as we can see, that also as a negative output. Okay, so it will make our liability less to SARS. One was for the return of the goods from the debtor's allowance, and the other one was from the debtor that has disappeared, so we won't be collecting that money, and that will also decrease our debt to SARS. Okay, so the total there will then just be the 40,200 plus the 45,000 minus the 7,245 and minus the 675. That gives us a total of 77,280. So that means, according to that, we owe SARS 77,280. Just again quickly, as you can see, the debtor's allowance, that was the amount that we returned. That was the debtor sent back. We will decrease our liability to SARS. Therefore, we have them in brackets. We're not adding. And the same with the bad debts. That's the debtor running away. He's been declared insolvent. We cannot collect the money from him. Therefore, we put the VAT on the bad debts also in brackets, decreasing our liability to SARS. So at the moment, we owe SARS 77,280. Those are all classified items. Output VAT, and it's based on the selling price. Okay, so now we have to look at the amount that SARS owes us, or the amount receivable from SARS, and that is all based input VAT, and it's all based on the cost price. So what item was the first item? You can remember that we bought goods. It was trading stock and equipment and some sundry figures there, and that was for 52,500. That was the VAT. That was the second calculation in the cash payments journal earlier. So that was 52,500. So SARS owe us 52,500. Then we also bought goods on credit, and that figure came to 18,000. That came from our creditors journal. Right, so you can see the first two outputs was a cash and a credit sale. The first two inputs was a cash and a credit purchases. If we're buying, then it's classified as input VAT, and if we are selling, then it's classified as output VAT. Then the next item was the creditor's allowance. In other words, we bought the goods, but now we're sending it back, so we won't be paying the VAT on those items that we bought, which means we can't offset that figure from the output, so therefore it makes our input, the amount that SARS owes us, less. And then right at the bottom, they've got drawings. So remember, the owner normally takes drawings at cost price. So we suppose the business has paid for those goods, and those goods are included either in the CPJ amount or the CJ amount. But now the owner has taken those goods for his personal use. So here we have to distinguish between what is the owner's personal life and the business. Remember, you're doing the books of the business. So therefore, we need to introduce the GAR principle where we're talking about the business entity. The affairs of the owner and the affairs of the business must be separated. So drawings, that is the affairs of the owner. And the VAT on the goods that the owner has taken, the business cannot claim that as an input VAT. So he has to make that input VAT a negative because the owner has taken the goods. Okay, so the business is not going to sell those goods. So now, but the VAT that was paid when they bought the goods was already included either in the CPJ amount or in the CJ, but now we have to decrease that because the owner has taken those goods. We can no longer claim, the business can no longer claim that as an input against an output. Then all we have to do is we have to total the input, which will just be the 52,500 plus the 18,000 minus the two items that's in brackets. So it's going to be 3,750 and minus 350. And then we get a total of 66,400. So what we're looking at now is how much do we owe SARS or how much does SARS owe us? But the first figure we have to look at, we need to calculate, is it the amount owing to SARS? So we have a figure of 8,000 Rand. That will be by information A, where it says that the amount due to SARS, that 8,000 Rand is the amount owing to SARS at the beginning of the month. Plus, we still owe SARS the 77,280. 280 that we collected on behalf of SARS. Remember, the business is a collecting agent, so we collected 77,280 that we have to pay over to SARS. But also, we've already paid 66,400 when we bought the goods. So now we have to offset the figures. So it's going to be the 8,000 that we owe him from the previous month, because that's the balance. It says the amount owing to SARS. It was 8,000. Then it's 77,280. That's the output for this month, minus the input of 66,400. And then we only have to pay him 18,880. That's after the output and the input has been separated. Okay, so it's the 8,000 plus the 77,280 minus the 66,400. So we owe SARS 18,880. Okay, that's a few very important calculations over there, especially the ones that goes in brackets. Just remember, all we did now, we grouped all the outputs together and we grouped all the inputs together, and then we just offset the two at the end. Also, the debtors allowance and the bad debts will be seen as negative outputs, whereas the creditors allowance and the drawings will be seen as negative inputs. There is, however, different ways of doing it, and we'll still be getting to the same answer if there's with the other method. Okay? But let's just look at the other questions that we still have to answer quickly. It says, when Rainbow Stores, that's the business, when they completed the VAT 201, the return, she entered the VAT input amount 3,000 more than what it should have been. So what they should have done was, the input is 3,000 more. Remember earlier, we said output minus input. So now, if she has entered the input as 3,000 more, the question arises, how will this error affect the amount payable to SARS? So in order to calculate the amount payable to SARS, we have to say output minus input. That will give me the amount payable to SARS. So if the input has increased by 3,000, then it means that we will be paying SARS 3,000 Rand less, because we're increasing the input. The amount that we have to subtract becomes more, so we'll be paying SARS 3,000 Rand less. That is an example of where the bookkeeper made an error. That is not anything evasion, that is an error. Okay? They're not trying to defraud SARS for the amount paying, it's just a normal error, a simple error that the bookkeeper has made. Then it says, suggest 2 actions that the bookkeeper should take to prevent errors on VAT returns. Okay? That's the question. So it says that we need to double check all the calculations and figures before we transferring the item. You check and you double check to ensure that all the figures, because you're working with the entity of SARS and they've got lots of power, so we need to double check to ensure that the figures are correct, because they might see that we're trying to defraud them. So you make sure that the figures are correct. We can also use accounting software to ensure that the accurate recording and calculations. Right? So we need to double check the figures, and in the accounting software, normally the VAT returns is done online. You just have to do everything. You just have to make sure that you do it accurately. And then also the supervisor or the owner should sign off the VAT return before submitting it to SARS. Okay? So it's double check. You can use accounting software, and then the supervisor or the owner will have to double check and sign off the VAT return before submitting it. Okay, so what does 2.5 say? It says, comment on Ben's decision to voluntarily register for VAT. So remember, volunteer, you need to earn more than 50,000. Okay, so if you want to volunteer, it has to be annual turnover of more than 50,000 and a million. If it's more than a million, he's compelled to register, which means it's compulsory registration. But as it is, it's between he's volunteering to register, he must fall in the category 50,000 to 1 million. So Ben's turnover for July is 568,000. That's exclusive. So that's the cash and the credit sales together. But the credit sales is the 345,000. You take away the 45,000 and then you get the 300,000. So it's not more than $1 million for July. So he falls in the category for voluntary registration. So now you can register for VAT. Okay. He's complying with the VAT, and then he will build up good customer relations with SARS. His business will have a good name. In other words, he will have goodwill with SARS because he's doing the right thing. Okay. And because he has registered, he is allowed to collect, he's allowed to charge VAT. If, however, his income exceeds $1 million, then obviously he's compelled to register. It's compulsory registration. But at the end, he's doing the right thing. He's registering, he's paying VAT, and now he's allowed to collect VAT when he sells the goods and service. And then all he has to do, he just has to offset the input and the output at the end of the month or at the end of every second month. Okay. So voluntary registration falls between 50 and $1 million. In this case, his turnover is 568. So it's less than $1 million. That is why he has volunteered. He's complying to the VAT legislation, and he will build goodwill with his customers and with SARS. He's allowed to collect VAT, and he is paying VAT. Okay, that's your 2.5. Then we just have to look at 2.6. It says that Ben's friend, Saul Cole, owns a braai store. His annual turnover is 1.8. His turnover is 1.8 million. That means compulsory registration. He must register. He's compelled to register. Now I told Ben that he does not intend to register as a VAT vendor. He's not intending to register as a VAT vendor. He is evading. He does not want to pay. That's an example of tax evasion. He does not want to pay. That is illegal. He feels that if this cost will just increase, and he needs to employ the qualified bookkeeper to keep records as well. So now we as responsible citizens will have to tell him 2 points regarding the FAQ. Okay? So the first thing we're going to tell him, if he doesn't pay the VAT, he's going to pay much more in interest and penalties for all the years that he has not registered since his business has started. So that can amount to very huge amount that he has to pay over to SARS. So for every year that he has not registered, he will be charged the VAT. He's responsible for that VAT and any interest and penalties on those amounts. Okay. And then what can SARS do? SARS can close his business and he can lose everything, and they can even claim from his private assets. So there's now the distinction between business equity, the affairs of the owner, no longer applies because he has enriched himself. What else can happen? He can lose his trading license, which means he's no longer allowed to open up a business. If he's not registered, he still has to comply to all the VAT requirements. In other words, pay your VAT and pay your VAT over register. So the correct thing to do is just eventually just register for VAT. He can maintain his own record, so he doesn't actually have to employ a bookkeeper. And SARS is glad to assist you in this regard. You should do the right thing, the correct ethical thing, register for VAT, and get his accounting records in order without any delay, so that SARS can keep him in the clear. And that's the correct, responsible thing to do. If you want to charge VAT, you need obviously to register and become a VAT vendor, and you have to pay over your VAT. Okay, that VAT, we do not law or peter with SARS, because they will come back at you, and very heavy penalties. You can lose your trading license. Right? Keep your books in order. Ensure that you are compliant. Okay. So that's the end of the lesson for grade 11 and grade 12 regarding VAT. Small topic, will come in the paper. It's paper 2 work. It's 15%, 15 over 100 if it's exclusive, 15 over 115 if it's inclusive. Ensure you understand the concepts, the definitions, and some basic calculations. Offset the two figures. You should be able to calculate the amount payable and receivable to SARS. And all from my side, I need to say, stay at home, stay safe, take care. While you're inside, please go over some work to ensure that you are online with your studying for Matric or for grade 11. Everything of the best for the rest of the year, and God bless you. Bye.